It's 1 o'clock right now. So, all right, we'll get started right now. So again, as I said, my name is Dave Wyse. I have a trading room and an alert service that's right line trading. And it's called the SPY Super System Trading Room and Text Alert Service. We trade mostly options, several different option strategies, but mostly options, nothing too complicated. Mostly puts and calls, straddles and strangles, and some spreads. That's about it. I don't show or post anything on butterflies or broken wing butterflies or some of the more esoteric setups that there are. We try to keep it fairly simple so people can trade these. Even new traders can trade these setups. All right, so let's get going. First thing I have to do, of course, is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, moving ahead here. If you have any questions, by the way, that I can't answer, you can put your name and number in the text box of the chat box or your Skype username, and Rory from Right Line will get you a call back and answer any questions that you have. If it has to do with pricing or it has to do with structuring the purchase, etc., things like that. Everything else I pretty much can answer. Anything technical I can answer, so I'll try to do that. And here's his number right here, which I'll show again at the end of the day. All right. This is just a graphic of the SPY Super System explained. I run the SPY Super System, which is a piece of software that runs on. I run it on thinkorswim. You can also put it on Ninja. It's called the Money Flow Tracker on Ninja, but I run it on thinkorswim, and you're going to see lots and lots of charts. This is what it looks like, and the whole point of it is to track institutional money flow, so that when we're making trade institutions into the trade, we won't be taking trades that the institutions aren't in. And the reason for that is because we don't want to be just trading against retail traders. We want to be trading with institutions, since that's who drives the market. And we'll cover that in just a second. This is what the alert service looks like. We call it the Compass system, which is what the SPY Super System used to be called before it has been enhanced. And it's a text alert service. I send the text alerts out on SMS alerts to your phone. You get them in, I'm on the alert service, so I know I can get them in about 5 to 10 seconds. You can get those sent to you and trade from there. Okay, this I always cover, and this is really kind of the bread and butter of how you can be consistently profitable. You have to know what drives markets. There's two groups here that drive that trade. These are the retail traders, such as myself and tens of millions of other people. Most likely everybody else here is a retail trader. We do not have the ability to move the market, to create trends, reverse trends. We don't have any ability to do that. So when the retail traders are in a trade, and the institutions are not in there in any force. In other words, the institutions can be trading, but there isn't any consensus between institutions of which way to push this stock or this index. So you're just getting a bunch of chop from them. When we're trading with just the retail traders with no institutional push to the stock, what you're getting is a lot of chop and a lot of chaos. And it's best to avoid those kind of situations, because you're not going to have any kind of consistent moves, and you're going to be fighting all day long just to try to squeeze out a few pennies, keep from losing a few pennies. And it's just not a time to be in the market. So these are the retail traders, these are the institutions. Now the institutions are made up of, you probably know, investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, HSBC, lots of investment banks. And the institutions are also made up of mutual funds, such as Vanguard, T. Rowe Price. They have billions and billions of dollars. They're also made up of hedge funds, and I'm sure you're familiar with the thousands of hedge funds that are out there with more billions of dollars. And the institutions also are made up of pension funds being police pension funds, firemen pension funds, state worker pension funds. Again, more billions and billions of dollars to go into the market. So that's where the trends are going to come from and be broken. They're going to be done by the institutions, all of them together. Now, the main portion of the institutions are algo trades. Institutions do have traders on the desk that actually push a mouse just like we do to take a trade. But most institutions, and all the big ones, they have programs or what's called algos, and these algos look for specific conditions or specific news to try to find an exploit to make money in the market and basically take money away from retail traders. And they know what retail traders' strategies are. It used to be MACD crossovers would work great. They wrote programs to basically bust these MACD crossovers. They can create the MACD crossover and then they can reverse it, and they trap the traders in there when they do that. So these programs, algos, this is where about 85–90% of the trades come from. They come in electronically. And if you want to see a kind of proof that this is happening, if you look at a news report that comes out, such as the FOMC, when the Fed makes their announcement at 2 o'clock on a Wednesday of what's happening to the interest rates, or when the jobs report comes out at 8:30 on a Friday morning, if you watch the SPY and you watch the 1 minute candle, the 5 minute candle on the SPY, when those particular announcements are made, what you're going to see is you're going to see a big, huge spike in volume and price, either up or down. It's going to move up quickly. It's going to move down fast, quickly. And if you look at the time that it occurs, it's like a millisecond after 2 o'clock after the Fed, or a millisecond after 8:30 on a Friday morning. There's no way humans are doing that. That's the algos. They read the news. They can electronically read the news. They look for keywords and key sentences, and then they generate trades based on that. So you're going to see lots of volatility where the stock shoots up, it comes down. That's algos trading, that kind of thing. And you'll see the same thing on any kind of news announcements that come out about company takeovers or any kind of bad news that comes out. You're going to see the stock price and the volume move dramatically in milliseconds. So that's not humans. Those are all retail. That's all institutional trades. Those are the algos making those kind of trades. Okay, so that's really important to understand. So our job is to identify when the institutions are in the trades and when they're not, and that's where the SPY super system comes into play. Just kind of throw this in here. This is something I didn't used to go over this, but this is obviously ace and jack of spades. These are $100 chips. This is a blackjack table. All right, and you're probably wondering what in the world is blackjack got to do with trading? Well, the question is, and if you've ever talked to your family or friends about you'd like to become a trader, one of the questions they're going to ask you, they're going to tell you, is that you're gambling. It's just gambling. You can't possibly win. You're wasting your money. So is trading stocks and options gambling? That's a good question. The answer is, when I was much younger, I made my living playing blackjack in casinos in Las Vegas as a card counter. What a card counter does is they track the cards that are coming out of the deck, just high cards and low cards, and you know when the deck is composed of more big cards and little cards than it normally is, that you've got an advantage. When it's composed of more little cards than big cards than it normally is, you've got a disadvantage. So when that's the case, when it's in your favor, you bet more. When it's against you, you bet the minimum. Right? So that gave me an edge as a card counter, and I made my living doing this. It's pretty boring. I mean, you're pretty boring. It's not really, your decisions are all cut and dried as far as what to do based on basic strategy and what the count of the deck is. So this gave me a mathematical edge over the casinos by knowing when the cards were in my favor. And to answer any questions, yes, I did get thrown out of several casinos when they caught me card counting. Now, trading stocks and options is very similar in that without knowing what the institution is doing, the trader has no edge. So in essence, they're gambling. So trading is gambling if you don't have an edge or a methodology to use. And this SPY super system gives us that. The SPY super system, this is what I call my card counting system. This is what gives me the edge over other retail traders that we're trading against, because that's who we're trading against. We're going to take our money from other retail traders who don't have as good information as we do and don't have as good as methodology as we do. We're going to take their money. So it's very similar. Without knowing what the institution is doing, the trader has no edge. So in essence, they're gambling. The SPY super system, which is a piece of software I'm going to show you, this is our card counting system, giving us an edge over other traders, allowing us the ability to become consistently profitable traders. Sounds pretty simple, but this is why I'm using this as an example, because listen, this may not resonate with you, but it does with me because I did this. when I was younger, and I think it's a pretty good analogy. The SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent profits. Okay, very important. So within the room and on the alert service, I have a couple of basic rules that we trade by. The first one is we trade the best and skip the rest. Sounds really easy, but it's important to, we'll go into how we find the best and skipping the rest. Now, skipping the rest is kind of underrated as how effective it is. This means not to take a trade that perhaps looks good, but the institutions aren't in. So you may be taking that trade if you didn't know the institutions weren't in it, and you're going to have you're more likely to lose than win on that trade. So skipping trades that would have been losers is just as important as taking trades that can become winners. All right, so trade the best and skip the rest. The second thing is our objective is not to make trades. Our objective is to make money. Now this goes a little counter to a lot of folks who are traders, because they feel like they're a trader, they need to be in trades all the time. You know, if I'm sitting around for 2 hours watching the market and I haven't taken a trade, I'm wasting my time. No, you're not. If you're not wasting your time, you're saving your money for the most part if you're doing this correctly. Right? So again, our objective is not to make trades. Our objective is to make money. Now, maintaining discipline, maintaining discipline, once you have strategies and methodologies that you know work, you have to stick to them, or you need to really stick to them, right? And what that means is we want to learn and follow the process. The process is the structure I'm going to show you of how you find good trades. The criteria that you have that makes a trade a high probability trade. So you stick to that. You don't start jumping around for other strategies that you're hearing about on Twitter or on other social medias, on Reddit, stuff. You'll see stuff everywhere. We maintain discipline and take the trades that we know work 85% of the time or more. So maintain discipline, learn and follow the process, and then remain patient. So you're going to learn the process, you're going to learn the proper discipline and how to take these trades, how to find them, and then you wait for them. You wait for them to come to you, right? So being patient, and this is probably one of the hardest things for most retail traders to do, which is to remain patient when they're trading. And that's why I say our objective is not to make trades, our objective is to make money. All of that is to push traders to stay patient until the trades are set up. Okay, now profitable traders, as a profitable trader, we need an edge over other retail traders. These are our edges. We have the SPY Super System software. This is the main one. This is a major one. This tells us what the institutions are doing. This is a key for everything else. This is what actually is driving our success. Then we also want to trade relative strength and relative weakness. Now this is something that a lot of retail traders overlook. Relative strength and relative weakness is not RSI. Relative strength and relative weakness is, if I'm looking to take a trade, how is my stock performing relative to the SPYs or the Qs right now? I mean, if the SPY's going sideways or the SPY's drifting down, and I've got a stock that's stacking green candles, that's got relative strength. That's what you're looking for, relative strength. Or if you're looking for shorts, you're looking for stocks that are relatively weak as the market moves sideways or up. That's how we found, that's what relative strength is, not RSI. And then we want to trade with the market trend if there is a market trend. A lot of times there isn't a market trend. You get a lot of chop. And then the last one here is buy near support and sell near resistance. All of these are meant to keep from chasing stocks, from suffering from FOMO, fear of missing out, chasing stocks up in the morning when they take off instead of giving them time. And it's a hard thing to do, I understand, because if you are on the market at 9:30, Netflix is stacking green candle after green candle after green candle, and you're sitting there watching it, and you feel like you're losing a fortune because you should be in the trade. So finally you give up and you jump in, and generally when that happens, you're jumping in somewhere near the top and you're getting trapped. Stocks don't keep going up or keep going down forever, right? They're always going to be pulling back and then bouncing. So what you want to do, ideally, is wait for the stock to pull back, find support, and then bounce into the original trend so that you're getting in near support, or if you're going short, you're getting out this resistance, selling near resistance. So that's why that's important. Now the compass system, which is actually the SPY Super System, this was the basic system when it started. It identifies the highest probability setups. while sidestepping setups that look good but will fail more often than they succeed. This is the skip the rest portion. It does this by identifying when institutions are driving the move and when they're not, and I'll show you what we look for. And the Compass system analyzes a lot of complex trading data and displays the results in an easily identifiable visual format, making it easy for traders to identify whether institutions are in the trade or not. And this visual element makes it possible for even new traders to find high probability trade setups. And I'll show you a bunch of those. All right, now, how to get an edge over retail traders. Only taking trades that are being driven by institutions, important. Trading stocks that have relative strength or relative weakness versus the SPY or the Qs, we just talked about that, and trading in the direction of the overall market. If you as a retail trader just follow these 3 steps, if you have the ability to know when the institutions are in there and follow these 3 steps, you're going to be ahead of about 97% of other retail traders in the world. They just don't know how to, they don't know how, when institutions are in there, they don't even look at relative strength and relative weakness. This is going to give you a big edge over other retail traders. And how does it give us an edge? Our trades will be supported by institutional buying and selling. That's the key. Stocks will be outperforming the index, the SPY or the Qs, and they will be moving in the direction of the overall market if there is an overall direction. All right, so that's how we get an edge over other retail traders, because remember, that's who we're trading against. This is a war. Trading is a war against other retail traders for retail traders. We're not going to beat the institutions. We're going to beat all the other retail traders that are out there with a bunch of money, trying to trade and not having the same information or as good information as we do, not having the good strategies that we have. Okay, now the SPY Super System software, I just want to kind of capsulize this. The SPY Super System software, it's the critical element in finding and trading the highest probability trades. This is the first thing we look at. First thing I look at is to make sure the SPY Super System is telling me the institutions are in the trade. If the institutions are not in the trade, if they're neutral or if they're going in a different direction than I want to trade, I don't take the trade. The SPY Super System software, this is the engine that drives our exceptional results. I'm going to show you our results during this presentation, and you're going to find that the results are outstanding. Big percentage wins, nice profits, etc. This is, if you remember this is the SPY Super System software, which you can buy. I bought it when I first came across it. I didn't get it for free. I had to buy it because I wasn't doing a room at the time. But this is what drives our results. The ability to identify when institutional players are driving a bullish or bearish move, and when they're absent, it's the key factor in pinpointing high probability trade setups. Main thing right there. Will we be shown how the system works? Absolutely, Kenny. I'll show you exactly how the system works. You're going to see plenty of trades with all the information here, and you're going to see the trades we took and why. Okay. Now this is just. I'm not going to spend a lot of time on this yet, but this is just. This is the SPY Super System on the Thinkorswim platform. This is what it looks like on my platform. If you're in my room, this is what I present every day. I have the SPY Super System up and running so everybody can see it. But there's things here to understand. These are the main indicators right here. Current time frame momentum, multi-time frame momentum, and long-term trend. These are the main indicators that I use. Now, this happens to be a 5-minute chart, but you can put this on any time frame you want. I use 5-minute and daily. But what you've got here is you've got color codes. Anything that's blue or green is bullish, and anything that's red or yellow is bearish. So you can see here on this 5-minute chart that the multi-time frame momentum, which is right here, is bearish, but the current time frame momentum has just turned bullish, right? This is the actual oscillator that's driving those colors. Okay, this momentum oscillator, it's a Laguerre, but it's not a standard oscillator. We don't have any divergence in that oscillator. It's just momentum. So these are the keys. Now on the platform itself, on the 5-minute chart, this is a very key level right here. This is the VWAP. It's the volume weighted average price. This is the level that all institutions use for entering and exiting trades. The volume weighted average price is key. If the stock is below the VWAP, you don't want to go long. If it's above the VWAP, you don't want to go short on a 5-minute basis. This is only effective on 5 minutes, by the way. You don't use it on a daily chart. The next thing here is this 15 EMA. This is the 15 EMA of an EMA. This is a smooth EMA. This also is a support and resistance level. So all of our quick trades that we're trading on a 5-minute basis, we're going to be entering either as the price breaks above or below the VWAP, or above or below the 15 EMA, with the momentum indicators indicating that the institutions are also going in that direction. So this is what makes up the SPY super system. This is a pivot point. I just have one pivot point on my chart. It's this white line. I don't trade off of it, but it's very, very important, because typically if you're coming down to a pivot point and you're making money, you want to be very careful when it gets to the pivot point, or if it gets to it coming up, because that's going to be a resistance level. So it basically offers a support or resistance level during your trade, where you can then start to consider taking profits. The other thing on here is these, what these are called pop symbols, pop out of the box symbols. You've got blue and you've got pink. This is a break of compression to the downside. So this is telling you you're coming out of compression. You can see the compression, that the stock is breaking below the 15 EMA. So this would have been a good entry for a short on the Qs right here, as it breaks down right there. Right. So those are most of the indicators. There are other ones that I'll go into, but this is the basics of the SPY super system. And just to kind of show a trade, just real quickly to show a trade, this is a trade we took in SMR back in May. We get in on 513, we get out at 515. This is a daily chart. So what was I looking for? Here's my entry right here. You see this white arrow? This was my entry. What I was looking for the current time frame momentum right here, and the multi-time frame momentum right here, and the trend if possible. I want all of those to be either green or blue. Right, that tells me that the institutions were in SMR right here. Okay, they were all buying in SMR. They had been selling it here, selling, buying. They were chopping around. Here it went to the upside. They were buying it. We bought it here, and we get out in 2 days for a 56% profit. So 2,000 invested in that, created $1,170 profit. But there's what I was looking for. Came up on my scan. I wanted to know if I could take it. Everything told me the institutions were in there. It broke out of compression. It was a perfect trade. Okay. And another one here. This is Tesla. This is on a 5-minute chart on Tesla. This is an intraday trade, just trading it for a fairly quick trade. So look at our indicators here. On a 5-minute chart, when you're just trading for off a 5-minute chart, you're not going to swing it. I'm only interested in the current time frame momentum right here. So as Tesla opened up in the morning, you see it opened up as a blue current time frame momentum. This was bullish. So I could take it here right in the open if I wanted to. I typically don't take them on the open, but you see how it broke above the VWAP? So you could get in here, you could have got in here, and you just ride this thing up, right? It stayed green. See how it stayed green? Institutions buying, buying, buying. It ran up, and this right here is called a standard deviation line. I just look for weakness start to occur here, any kind of momentum loss, and I get out right there. But that's a 5-minute chart. That's a trade on Tesla. The institutions are telling you that they're buying Tesla. You notice how they went back to selling it after this stretch right here, right? Do I still use right lines, market internals indicator on the SPY super system? You know, what I do is there's a couple of things, and I'm going to talk about this in a little bit. I do use market internals, and I use a couple of different things. You can use market internals. I use TC2000, which is a scanning program, and I use what's called T2104. The T2104 tells me the cumulative volume index for stocks moving up and stocks moving down. What's the volume of stocks moving up minus the volume of stocks moving down? If it's plus, then it's bullish. If it's minus, it's bearish. You can get the same thing on Thinkorswim with VOL, $VOLD. That'll tell you what the volume is like. And I do use that. I do base my trades in that. Now I don't have it built in here, but I'm actually working on being able to come up with a methodology where the market internals can be displayed somehow on the chart right here, so we'll know if the market internals are also in our favor. And because I'll look at that, and if the market internals are against me, even though the stock looks good, I'm going to be more hesitant to take it. But I am working on that basically as an AI type of add-on to the platform here. Okay. All right, so there was Tesla. This was a SPY. This was a 5-minute chart. This is what we call a SPY super system methodology. We trade the SPY, the Qs, the IWM, or the futures off of a 5-minute chart, just using our current time frame momentum right here. So if you look at the current time frame momentum on the SPY on this particular day, you see it was short, long, short, long. Now, when it went long here, you see it went from yellow to blue, selling to buying, and you see how it broke above the VWAP right here and the 15 with a pop out of the box symbol. This is the ideal situation to get into a SPY trade. You're very close to support. So if it breaks against you and it goes down, you're not going to lose much money. Very, very tight. So we get in right here and you just ride it up. Now, once it starts to move up, it's getting away from the 8, the VWAP right here, and then the 15 starts to become, that becomes your stop. But you're getting fairly extended here. So you watch for any kind of reduction in momentum like you got right here, and you take the trade off right there. And that's a perfect SPY super system trade, and it's good for about 7 candles, which is about 35 minutes, and that's probably good for about $150, $160 a contract on the SPY calls. All right, so but you notice that the institutions came in here and they stayed in here all the way over to here. But we took momentum profits right up here. All right, and I wasn't worried about the current time, the multi-time frame momentum, because I was just trading off of 5 minutes. This is more important on swing type trades. All right. All right, so that's the SPY. This was a Wendy's. This was an overnight trade. This is off the daily chart. Let's look at our indicators. Now, since we're daily and we're looking to do swings, I'm going to be using the multi-time frame momentum and the current time frame momentum. Multi-time frame here, current time frame here. This, I want to see red. I want to see red or yellow, right? So here was the earnings on Wendy's. It went to red right here. I took the trade right here, and I wrote it down. It was very quick. I took it here as it broke down because everything was red. I took it here, and this was an overnight trade. Took it into here, and then I get out the next morning on this big pull down. Right, but notice everything is red. This tells me that institutions are selling this. Most retail traders are not going to have any idea what their institutions are doing in a situation like this. All right, so that's just kind of a basic breakdown. I'm going to show you a lot more of these charts, but so you can see what we're looking for. This is I just throw this in here as a kind of a funny picture. This is a trader who doesn't understand if the institutions are in the trade or not. Or perhaps he's suffering from FOMO and he's chasing the stock up, and all of a sudden a reverse on him, and his support level is $2,000 below where he got into the trade. This is what happens when you're trading without any kind of methodology, strategies, and information. And this is emotional trading. You're trading on emotions. There's no way you're going to be able to be a consistently profitable trader if this is how you feel when you're making trades, right? This is somebody like us who we got a nice, easy methodical system that we use, good strategies, good setups. We know when the institutions are in there. We know we're going to have an 85 to 90% win rate. We're very relaxed and happy. I mean, so we're not trading like a crazy man like that. Okay, this is something I've just kind of thrown in. This is fairly new. I don't want to confuse people, but what I'm saying here is the process precedes results. The whole point of this particular slide is you have to learn the high probability criteria and strategies. That's got to come before focusing on your results. Too many people look at their P&L and try to make a determination if they're trading well based on how much money they make or lose. That's not right. If you focus on your results, your P&L, without having a solid process to follow, it's going to end in failure. Because you've got to be making trades that are going to have a much more likelihood of being profitable. Just because you took a trade and made money doesn't make it a good trade. What it does is reinforces a bad trade in a lot of cases. And just because you took a trade and lost money doesn't mean it's a bad trade. It was probably just a good trade that didn't work. And what you want to focus on is learning the strategies and the methodologies so that those are the trades you're taking. Yeah, there's going to be some losing trades. There always is. But overall, long term, you're going to be a profitable trader, right? So process before profits. Please don't be following your P&L. I don't even look at my P&L during the day. If you're looking at your P&L, you're basically instilling emotion into your trading. And once you put emotion into your trading, it's going to skew the way you trade. You're just not going to be able to trade the way you should based on technicals. Okay, and this is a thing called OODA loop. You may or may not be interested in this. OODA loop is called observe, orient, decide, and act. It's just basically a thought process that I go through, and this is used by the military, it's used by corporations. I use it as this: observe, which means use my scans, watch list, and news to identify prospects. That's what I'm doing. I'm finding prospects. And then I orient. Identify whether the prospect meets the high probability criteria on the daily and the 5-minute chart. I identify support and resistance levels, know the next earning dates, check the option chains for pertinent information, expirations, etc., and then make a decision. Make the decision. Did that trade I just look at, does that stock I look at, is that something that's a high probability trade? Is that the best one I can find right now? And if it does, make the trade. Try to avoid analysis paralysis. Once you've gone through the process, make the trade. So this is just meant to focus you on a particular thought process to do this. Okay, this is what's called the basic high probability trade setup funnel. This is the criteria that I go through. This is a virtual thought process I go through. I look at the daily chart first on any stock that I'm going to take, unless it's going to be a SPY super system trade that I'm only going to be in for like 2 or 3 candles. I have to have a daily chart that aligns with my direction. If I'm going to go long and if I'm going to stay in the trade all day or overnight or 2 weeks, the daily chart has got to be bullish if I'm going long. If the daily chart is not bullish, I'm not going to take it. If you go long a stock that has a bearish daily chart, what you're trying to do is you're trying to catch the bottom, and it's likely to fail. And if it starts to go against you, you have no ability to stay in that trade because you don't have a daily chart to lean on. And then I look at the 5-minute chart for my best entries. I want to trade with the trend, both the stock and the market. What's my stock doing today? What's the market doing today? Are they both going up? Is my stock going up and the market's going down? You need to have the context of that. This is the most important right here. The SPY super system must align. You've got to have that telling you that the institutions are in the trade. So if you're in a swing trade, that means your current time frame momentum, multi-time frame momentum, both have to be red or yellow for short, blue or green for long. You've got to have that. If you're looking to go along a stock as a swing trade and your SPY super system is telling you that the institutions are not going long right now, you can't take it. You can take it, but you shouldn't take it. I won't take any. I only want to be in there when the institutions are in there. And then I look for relative strength and relative weakness that we talked about, and then enter somewhere near support or resistance for the short. Okay, that's the process that I go through in each trade that I try to find. This is basic high probability trade setups. And this is just the same thing written out. I've identified the 2 most important ones. The SPY super system indicators must align in the direction of the trade, and the stock to be traded should have daily and 5-minute chart aligned, and then all the rest of them we talk about here. One thing I do want to mention on the VWAP on a 5-minute chart, the price should be above the VWAP if you're going to go long, and should be best to stick to that, because that gives you an additional indication that if the stock price is above the VWAP, it's likely the institutions are buying it. Okay, this just kind of goes over the strategies we use in the room. If you come into the room on the alert service, I have videos on all of these, but just so this is what you can expect to use. Straight calls and puts, very common. This is most of them. I do straddles and strangles. This is a non-directional trade. The market is choppy. I don't know which way the stock's going to go, but I think it's going to move a lot. Then I'll take a straddle or a strangle on it. So I don't care which way it goes. I just want it to move a lot. I do debit spreads using weekly options expiration. Those would be directional trades, bullish and bearish. We did a couple on coin last week. Debit spreads really worked very well, 40, 50, 60% per trade. I do time spreads over earnings. We haven't had earnings yet, but they'll start coming out next week. Time spreads are a non-directional trade that captures the increased volatility in the option prices that are put into those option prices before earnings come out. The market makers don't know which way a stock's going to move when earnings come out. They don't know which way it's going to move, and they don't know how much it's going to move. So they jack up the price on the options, both the puts and the calls, to protect themselves. So that's called a volatility increase. The time spreads are non-directional. We're just looking to capture that volatility crush, because once earnings come out, the market makers strip the extra premium out of those options. And if you set up a time spread correctly, what we're going to do is we're going to capture that volatility crush after earnings come out, and we make money on it that way. I have a weekly ATM strategy. I'm not going to go into detail because it's for neutral or bullish markets. We haven't used it much lately because the market it's been too choppy. But basically, this is just a situation or a trade where we sell puts every week against a much longer term dated put on a neutral to bullish stock. The longer dated put protects us. The selling puts every week brings in premium. So I call it the ATM. because we're doing the actually puts at the money, but it's also like an automatic teller machine. The thing is very, very effective if the setup is correct and the criteria is correct. And we do credit spreads to capture premium over a few weeks. We now also have one strategy that I use inside the room. I can't alert on this. I can't even post these trades. This is called the SPY Super System methodology. What we do is we trade SPYs, Qs, IWM, or futures on a 5-minute chart for just some very short trades. 1 candle, 2 candle, 3 candles, very short trades. We try to catch these in the SPY, the Qs, the IWM, the futures, the ES, the NQ, and they're very quick. But I can let you know when they're setting up, but everybody needs to, if wants to do this, needs to learn how to do it themselves, because you got to manage these trades yourself. You're only in one trade at a time, and they're very, very quick. It's a very profitable strategy if you do it correctly. Okay. The alert service, just to cover that, it's designed for day trades and short-term swing trades. This is not for investments. This is for short day trades and short-term swing trades. Most of them will be out in the same day or overnight. A lot of them are overnight because I know there's a lot of folks who are under PDT or pattern day trader rules where they can only do 3 day trades every 5 days. So any trade that I take and I alert on or post in the room can be held overnight, even if I don't hold it overnight. Because remember, every trade I take is based on the institutions being in the trade and the daily chart being bullish if I'm going long or bearish if I'm going short. So that means you can hold it overnight. Real-time alerts on the highest probability trade setups. And of course, what makes that up? Institutional involvement, market internals, which we talked a little bit about, and technical analysis on that. Okay. All right, this is an equity curve. I don't like to brag about this stuff, but we have a very, very good win rate, and this is an equity curve for Q4 to Q1 of 2025. Pretty nice equity curve. That's based on $2,000 per trade, by the way. I'm not saying everybody needs to do that. I don't even do that, but I have to have some sort of a baseline to determine from week to week and month to month what my profitability is like. Okay. Now we're going to talk now about Fibonacci candles before we get into actual room results and more charts, because I know a lot of people came here to hear about Fibonacci candles. So let's talk about Fibonacci candles, how to use them with the SPY Super System. Now, if you've not used Fibonacci candles before, they're going to look very similar to regular candlesticks. So this is the British pound, Japanese yen. This doesn't make any difference. It could be Tesla, it could be Apple, it could be the NQ, it could be gold. It doesn't matter. What we're interested in here is the structure of these candles, right? This is important. The candles that have flat tops like this, flat tops, Fibonacci candles with flat tops, no upper shadow, no what I would call a wick on it. These are bearish Fibonacci candles. Any candle that has a flat top is a bearish Fibonacci candle, right? And you can see the trend here. See how smooth this trend is? Comes down, comes down, comes down. One thing to notice is each candlestick starts in the middle of the previous candlestick. It always starts in the middle of the previous candlestick because of the way they're constructed. They're made up of 2 candles. All right, so this is a bearish move right here in this particular trade. All right, now you can see the candles start to get small and they start to get wicks and tails and they're coming down, and then you start getting green candles with big wicks and tails on them. This, what we're looking for, is a Fibonacci reversal. Fibonacci reversal is one of the best ways to use Fibonacci candles, because if you're looking to get in on a stock that's pulling back and getting ready to bounce to go back into the original trend, let's say you want to go long this, you're looking for a Fibonacci reversal from a bearish trend to a bullish trend, and Fibonacci will tell you that. So as this comes down, you notice you start getting wicks and tails, and now you get a flat bottom right here, right? That's a bullish Fibonacci candle. That's a bullish Fibonacci candle. So would you take it here? Well, here's the caveat. When you're in a downtrend, for example, and see how big these candles are, and you get a Fibonacci reversal to the upside right here, I personally wouldn't take this because these candles are too small relative to this candle. Now, you would have made money on it. Okay, you get a flat bottom, then you started getting wicks and tails. But my ideal reversal here is I watch for it to come down, and as it goes up and chops around, and I get another bearish candle and a bearish candle, wick and a tail. Here's my Fibonacci candle that I want. This is the Fibonacci reversal candle to go back into the bullish trend. Why? I'm going from flat top to flat bottom, which it did over here, but look at the size of that candle. See how big that candle is in relationship to these and these? That gives me a Heikin-Achi reversal right there. This is where you enter the trade, right here, and you stay in the trade as long as the trend maintains. And the trend maintains as long as you're getting flat bottom candles that are bullish, like that. Flat bottom, flat bottom, flat bottom. Get a wick and a tail, still green, another flat bottom, another flat bottom, another flat bottom. This would be a continuation right here because you had a bullish move, a wick and a tail, and another bullish move. That's our continuation. I can actually continuation candle. This is the reversal candle. This is the continuation candle. And now when you start getting this kind of stuff, you're out. Okay, that's the trend, and that's what Heikin-Achi candles do for you. You can see how easily they show you the trend, and they show you when it's bullish and it stays bullish. You don't know, these are not 5-minute regular candles. If you were watching standard candles, you'd have a lot more noise to be dealing with. All right, so that's important. That's what you want to remember. Flat top, bearish. Flat bottom, bullish. Reversals, flat top, go to flat bottoms. That's a bullish reversal. All right, so, and I emphasize this because this is what to know about Heikin-Achi candles if you're not familiar with them. Bullish Heikin-Achi candles have flat bottoms. Bearish Heikin-Achi candles have flat tops, right? Bullish Heikin-Achi reversals are identified by flat top candles, which are bearish, followed by flat bottomed Heikin-Achi candles. That's the reversal that we just saw. And bearish reversals are the opposite. You have flat bottom candles, Heikin-Achi candles, followed by flat top candles. All right, just like this. Flat bottom candle, followed by a flat top candle. That's a Heikin-Achi bearish reversal. I wouldn't be taking this, but that's what it is. And here is your bullish Heikin-Achi reversal right here, reversing this big trend. All right. Now, I'm not going to read all of this. This is something I did on Reddit quite a while ago. But if you haven't used Heikin-Achi candles in your technical analysis, you may want to try to use them to improve your trading. They did improve my trading. Once I started to use them, I was able to increase my win rate by a few percentage points, which, when you're trading at 82, 83%, a few percentage points is a lot. If they mean average barring Japanese, they do smooth out price action, so identifying trends and reversals is clearer since they eliminate a lot of the noise and make it easier to see trends and stay in a trade throughout the whole trend, allowing for improved profits. So being able to get into a trade right when it's reversing to go back into the trend and being to stay into the trend longer, both of those things are going to make a big difference in your profitability. And I won't go over this again. We just talked about that. We covered all of this stuff, but this is something I've written, and you'll get it when you get the replay of this, and you can read through the whole thing. But it's basically what we just talked about. Okay, so again, here's introduction Heikin-Achi candles. They evolved from Japanese candles. They just to understand how they're constructed, they combine the open close from the previous period with the open high low close of the current period. That's why they always start in the middle. That's why Heikin-Achi candles always start in the middle, right? This fusion minimizes market noise. It's going to give you a much clearer, easy to see depiction of what the trend is, right? It's going to give you a clear depiction of the prevailing trend. If you want to know what Heikin-Achi means, it represents average pace in Japanese. And unlike traditional candles, Heikin-Achi doesn't follow the 1, 2, 3 candlestick reversal pattern. No, they're completely different. Okay, but it does excel in identifying trends, potential reversals, and classic technical analysis patterns. All right, so again, this is what we just saw here. I just want to reemphasize flat bottom candles in an uptrend signal a strong visual of the current trend. See these flat bottom candles? See how nice this trend is to see? And I'm going to look at some real charts here in a minute about this, but here's your reversal right here. This is coming down. This is reverse, and here's where we get the good reversal. Now, if this was your VWAP right here, and the stock is coming through the VWAP on a Heikin-Achi reversal candle, that's ideal. That's an ideal place to take the trade, and as long as it stays above the VWAP at that point, and you don't get any big Heikin-Achi reversals in here, you can stay with it. See how nice this trend follows. Look at all those flat bottom candles. And here's what you'd get out. Here's a flat top right here after a pretty good move, and I can actually you'd bail here, right? And look how far you are away from your support level. You've made a lot of money on this thing. Okay. Now these are tips for using Heikin-Ashi candle. These actually go with any kind of Heikin-Ashi candle or regular candle that you're using. Examine nearby support or resistance levels impacting potential gains. When you go into a trade, especially if it's a swing trade, you must know where your resistance levels is for long and where your support levels is for short, because you've got to know that you've got enough room to get to those support and resistance levels to make enough money to justify the trade. So you've got to know where those are. You want to align the trade with the current market trend. If there is a market trend, choose a stock with relative strength or relative weakness. This applies to whether you're using Heikin-Ashi candles or not. I do look at the Bollinger Bands, but with the Thinkorswim platform and the SPY Super System, you know you break the Bollinger Bands are expanding when you start getting those pop out of the box symbols, the little arrows that point up and down. And after I enter a trade, I don't switch to standard candles immediately, but when I'm thinking of getting out of the trade, I've got profits, I'll switch to standard candles. So I won't wait for a Heikin-Ashi reversal to the downside to take profits, because I don't want to wait 2 candles to take profits. I want to get out of the first one. Okay, so that's, again, here's the distinction of Heikin-Ashi candles. Bullish Heikin-Ashi candles have flat bottoms. I want you to remember this. Bearish Heikin-Ashi candles have flat tops. Bullish Heikin-Ashi reversals are identified by flat top candles followed by flat bottom candles. We're going to look at some charts here. And bearish Heikin-Ashi reversals are identified by flat bottom candles followed by flat top candles. And there can be obviously dojis in between, but that's what you're looking for. And again, here's the main advantages of Heikin-Ashi candles. It smooths out price action, reducing noise. Makes identifying trends much easier. Improves identifying confirmation of trends or trend reversals. This is a key thing. A key thing. If you're chasing a stock in the morning, and you shouldn't be like FOMO, but you want to wait. You wait for it to come back, find support, start to bounce, put a Heikin-Ashi reversals candles on there, and see if you can find a reversal back up into the original trend. That's going to give you a confirmation that trend reversal has occurred. Confirmation, Heikin-Ashi candles inherently are confirmation candles because there's 2 candles there. It is confirming the reversal. And again, it helps identify potential exits when the candle body shrink or reversal occurs. Those are your the main advantages of Heikin-Ashi candles. All right, so I'm going to show a couple of charts here that I have graphics on. Then I'm going to go to some live charts on Heikin-Ashi. This is Uber. Now, it doesn't matter when this is a couple of years ago, but notice this is on May 1st right here. This is a standard candle. See the gap? Nice bullish move here, right? So this is a regular candle. Let's go back and let's look at what Uber looked like on May 1st, Heikin-Ashi candle wise. First thing to notice, there is no gaps. Heikin-Ashi candles don't have gaps. So if you were taking this on a Heikin-Ashi reversal, here's a flat top, flat top, flat top, flat top, wick and a tail, flat bottom. This is your entry into this trade right here on May 1st. May 1st, this Heikin-Ashi reversal right here. This is your entry into the trade. And you get flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. If you were following this in your trade, you would probably get out somewhere up in here. You notice they start to get small. You get out up here. But there it was. This is what it looks like here. Much more difficult to understand this when you're getting all these gaps. You think you're missing everything. But where you would have got in right here on that day, you would have been in great shape. And you would have caught all of that move. So that's again, there is no gaps on Heikin-Ashi candles. All right, so we're going to look at some reversals from Friday's trading, and I'm going to go a couple live trades, couple of live systems here. First, I'm going to show this is the SPY Super System, the SPY Super System on Thinkorswim right here. This is a daily chart, but this is what it looks like. You can see this is what it looks like based on what I showed you before. We have a bunch of scans here that comes with the software. This is cascading up scan. This can be run in 5-minute or in daily. This tells me stocks that have got relative strength. These are cascading down scans. This tells me stocks that have relative weakness. Again, there's a scan for 5 minutes. There's a scan for daily. And then I've got a bunch of other ones. This is the one that I'm just getting ready to add. This is called the One Wise Bull Scan. This is for daily scans. This is for swing trades. This is if you're looking for swing trades. One of the nice things about this platform is when these come up, all I have to do is click on them, and it's going to show me the daily chart right there. Look at the daily chart. You see green, green, green. This, by the way, is a momentum stock. It's not one I would recommend trading, but it's all green. So if I look at these, I can see which ones look good. Newegg looks really good. See that nice move here? Starting to move away. MSTR, it's crypto stock. We got bullish here. KTOS, another nice one. Green, green, green. Again, you can see the green. You can see that they gapped up here. You'd have to look at other technicals to decide whether to take it. But this scan that I'm just actually working on right now shows some really, really nice results for swing trades. So you probably want to touch something like this. You'd wait to see what it does the next day, right? And then the NSC. So anyway, this is the SPY Super System software. Now I want to look at a couple of trades here that I had looked up. Now this is a daily chart. All right, so here's HL right here. This is HL on a daily chart. All right, so this was a stock that came up as a bullish trade. It's precious metals, HL. But you see what you've got here. You see that this is a swing, right? You see how this is bearish, yellow, yellow, yellow. See, it went to green today. This went from bearish to bullish 2 days ago. This tells you that this is a good setup for a long, right here, HL, right? As it bouncing up. See, those are the things I want to look at. Is CDE. This is another good one, but not all of them are going to be like that. All right. Some of them will work. Some of them you may have to pass on. GE looks really good. See the blue went from selling to buying. Institutions are in here now. You can see that. FRO. What does that look like? See, here's the difference. This is frontline stock. The pattern looks pretty nice, right? But see what you've got here. Current time frame momentum looks great, bullish. Multi-time frame momentum doesn't look so good. This is yellow. I can't take this trade because the institutions, I'm not knowing that the institutions are in here yet. All right, I'm waiting for this thing to turn to blue or green, so I don't take that one. So that's one of the things that even though the stock looks pretty good, I'm going to pass on. All right, NVIDIA, everybody probably knows about NVIDIA. Look how beautiful this setup is right now in NVIDIA. So these are the things that look pretty nice. All right. Now, if I take this and I switch this over to Fibonacci candles, all right, so I can change my style here from candle to regular candle to Fibonacci candles. That's all you have to do. These are Fibonacci candles. So if I look at HL, the one we just looked at just a minute ago, all right, you see what you've got here on this candle? See how we've got wicks and tails? Notice the institutions are buying it, right? Green, blue. Buying it on the multi-time frame, buying it on the current time frame, flat bottom. That's a Fibonacci reversal right there. That's an excellent move into the Fibonacci reversal. Arthur, oh, you're in the Philippines. Okay, yeah, you'll get a replay of this tomorrow. Tomorrow, Monday at the latest, Arthur. So thank you very much. So there's a Fibonacci reversal candle. That tells me that that's a good setup right now to enter that. Right. Let's take a look at Fro. What did Fro look like? Fro also is a Fibonacci reversal, but see the yellow? Can't take it. Can't take it because the institutions are not here on the long-term multi-time frame momentum yet. They may be the next day, but they aren't now. So that's what I look for on these kind of trades. Now I'll show you my TC2000 charts, so I can show you a few other things here. All right, so this is my TC2000. Okay, so let's look at HL. All right, so here's HL. This is a regular these are regular candles on HL, and this is the TC2000 chart I use for scanning. I've got some major moving averages on here. The red is the 50, the blue is the 100, the purple is the 200, the pink line, this orange line here is the 15 EMA, and the white line is the 8. Those are all I use on here. But see how it's breaking out here? All right, and if I switch this to Fibonacci candles, there is your Fibonacci reversal that we just saw. Now you notice on over here how it went to a Fibonacci candle right here, Fibonacci reversal candle right there. See how you got 3 or 4 nice big candlesticks in a row? When you went short, you got 3 or 4 nice candlesticks in a row. That's what you typically get with Fibonacci. You get a confirmation, it's likely going to work. All right. So if I look at NVIDIA, there's NVIDIA. This is a continuation. This isn't even a Fibonacci reversal candle. It occurred right here. We're already in the trend. So that's basically just a trend on the way up. And if I look, for example, at Tesla, just to look at some other ones, there's a Fibonacci reversal candle right there 2 days ago, but I got a lot of resistance here. See the 200-day moving average? So that's what I say. You need to know what your support and resistance levels is on these. One other thing, I'm going to switch to 5-minute chart just so we can look at some some trades from Friday on the SPY or the Qs or the IWM. I did trade the IWM a couple of times. All right, so here's the SPY super system. I'll move this out of the way. So here's the SPY super system on Friday. All right, now I took a short right here on IWM, and you can see why I took it. I took it right here, right off this candle. See the VWAP right here, the volume weighted average price, the pink line? See how it broke below the pink line right here, right? But notice this is still green. Current time frame went to the green, but looks what happens on the next candlestick. It's yellow. I take it here, I ride this down, I wrote it down for 2 candles, made about $25 a contract on it. Not a big trade, but that was a very choppy day, but that was a pretty nice trade. But it was below the VWAP, that was important, right? And if I go back and I look here, I don't take these when I'm below the VWAP. I don't take these long. Now let's look at the SPY, see what that looked like. Because Friday was a pretty crummy day to trade, technically. It gapped down and then it didn't do an awful lot. But here's the SPY. So we'll go back and look and see if we had any opportunities here. Very few, because we're below the VWAP. We wouldn't take it till we get above the VWAP. Now you could take it long here if you wanted to, but this orange line here is a standard deviation line. It's going to give you a little bit of resistance. This is probably not a bad trade right here. Notice it goes blue as the stock moves sideways. It pops out of the box right here above the 15. See the 15 EMA? Take it right here. And if I switch this to a Fibonacci, let me see if I can. I can over here. Yeah. Let's switch this over to Fibonacci just to see what it was looking like. It's already Fibonacci. Yeah, that's a Fibonacci reversal candle right now on that entry. So that's where you take it long. It was a confirmation of a reversal with a Fibonacci candle. You follow it in. Not a big move here. Goes from about 624 up to about 624.50. So it's not a very big move, but you make money on it. It's staying green. Right. So that's what you look for on something like that. I think let me just look at something else here. ASTS is what I traded on Friday. I traded ASTS. This is the end of the day, but this is where I took it. Right here. See how it went from red selling to blue buying? And you see how it's breaking above the VWAP and the 15? This is where I take it on this blue candle right here, on this blue current time frame momentum. I don't need multi-time frame out because I'm only trading on a 5-minute chart. I took it here. This was actually pretty nice when I took a lottery trade on this. I actually bought the $47 calls, but they were slightly out of the money just for a quick trade. But look at the beautiful move in this thing. From 46.98 up here to 47.37, and it made about 75% on that trade just in calls. But you can see the red to blue and buying off the 15. All right, so that's what I look for on Fibonacci candles, and you can see what they look like on the chart. I'll just show you a couple of other ones on TC2000. We've got a couple of bearish ones I wanted to look at. All right, so if we look at PayPal, this PayPal. Let's look at Fibonacci. This is a Fibonacci candle, pretty ugly candle right there. And by the way, it's important to understand that if you were looking at a regular candle and you saw this with this big tail coming down, you would think that there was a bunch of selling and here comes the buyers back in again. That is not the case on Fibonacci candles. Fibonacci candles, if you've got something that's got a big tail on it like that, that's actually more bearish than less bearish. Okay, if I look at a regular candle, this is what it's going to look like. But a regular candle, these tell you that it's more bullish and more bearish. And if you get wicks on the top of bullish candles, those are more bullish as well. Right, so you can see the moves you've had here. There's a Fibonacci reversal. Follow it up, works nice. Fibonacci reversal to the downside, works nice. Fibonacci reversal to the upside, works nicely. So that's what you're looking for. Look, one more CVS. right? CVS. This Heikenatch reversals on CVS. This is a Heikenatch reversal candle right here. This had a little tiny tail on the top, but the actual reversal took place here. Nice trend. Going long, nice trend. Easy to see these things, right? And RELY is another one that's bearish. See how we got bearish here? Here's the Heikenatch reversal to the downside. Flat top, flat top, flat top, flat top. Now we're doji, 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 going nowhere. Heikenatch reversal to the downside. This is a continuation of this downtrend right here. And if I look to regular candlesticks, you're going to see that I've got a support level right there drawn, just below that RELY. Beautiful short for Monday if it opens red. Okay, and Netflix. One other one everybody's familiar with. Netflix is Netflix. It's a regular candle on Netflix. Heikenatch candle on Netflix. Heikenatch reversal candle on Netflix right there. Right there. It's coming down. This was a Heikenatch reversal. This is a Heikenatch continuation to the downside. Here's the chart right here. You notice the red line on the daily chart. That's the 50. That definitely becomes a support level that you have to be aware of. Okay, so that's how I use Heikenatch candles, and hopefully that's going to help you how to use these things. Okay, so let me go ahead and get back to the presentation so we can not spend too much more time. All right. Okay, now I'm going to talk about the results that we've had in the room in the alert service. And I'm not going to go every month, but I do want to cover 2023. If you put $2,000 in each trade that we took in the room, you would have had a profit of about $60,000. And these are not my results. This is what would have happened on 2,000 based on each trade that I posted, where I posted to get in and where I posted to get out. All right. And in 2024, it produced about 55,000, just a little bit less. And a lot of the profitability you have, of course, is going to be dependent upon the market you're in. Trending markets are going to give you much more profits than choppy markets are going to. And right now we're in a news-driven choppy market, very difficult with all this tariff news. And I think you're going to be surprised at the results that we've had. This, I just wanted to put this one out. We're pretty proud of this. This was when the tariffs were imposed, or not imposed, but when they announced 35, 40, 45% tariffs back in April. And then they took them off. 2 days later, they paused them. We were short 4 stocks at the time. We weren't in anything else except these 4 trades. So the SPY was down over 10% in 2 days. Big, huge drop. These are the 4 trades we're in. We were in AVGO, which is Broadcom. We get in for $79 a contract. We closed it for $1.04 for a $700 profit on $2,000 invested. Nike, we had Nike on 328. We entered for $285 a contract. We closed it for $9 a contract. That's 216% profit. This is the biggest trade I've had this year. The big one. And this is because the tariffs were going to go on in Vietnam, 35%. Well, guess what? Nike makes all their products. But we were in the short here. We're in short here. This was produced $4,300 in profits for 2,000 invested. Sarepta, we were in for $450. We got out for $8. Another $1,400, 78%. And we were in NNE short. We were short all of these. These are the only 4 trades we had on. We entered for $1.80, get out for $2.25, 25% profit. All right, so that's just to show what we did during that time, which was wrecking people's accounts. I know an awful lot of retail traders who, when those tariffs went on and then were taken off, they got short when they went on, and they got clobbered. And then they had to cover all their shorts. When it bounced back up again, they got long, and then it reversed back again. They're out of business. They got margin calls. They're finished. That's what happened to them. And so, you know, it's a sad thing, but that's what happened with that kind of news-driven volatility. Okay, a couple questions here. That's a good question, Jeff. If we're not familiar with placing and exiting the different type of option trades, how long of an estimate would you say it takes a person to learn? Just an estimate. Also, would you say the option broker, look here, option broker, which option broker to use? You know, I don't recommend particular brokers. I use Tradier. I don't trade on Thinkorswim, by the way. It's important to understand that the chart, the SPY super system runs on Thinkorswim. I don't trade on Thinkorswim. I trade on Tradier. Thinkorswim is a good platform to trade on. So is Tastyworks. A lot of people like to use Scottrade. I mean, you can trade anything you want. I trade on Tradier because I pay a flat fee per month of $50, and I don't pay any commissions on options or stock trades. And I do a crap load of option trades. I mean, huge amounts of volume. But as far as learning the different kinds of trades, I mean, I've got videos on them on. I don't think it's going to take you too long. You know, obviously buy puts and calls are going to be pretty simple. The straddles and strangles you'll learn pretty quickly, and the spreads that we do are pretty easy. The ones that we do are fairly uncomplicated. They won't take that long to be done. Namra, is this being recorded and shared? It will be. Do I use a TPI indicator? I'm not sure what a TPI indicator is. Let me see if I can know what it is. TPI. I don't know. You have to tell me what you're talking about with TPI. It's not one I use, I don't think. What in general estimate of how many room trades are there day versus at least one overnight swing trade? Well, I don't, you know, you're going to see, I don't do an awful lot of trades. And if you take if an alert on a trade, typically it's meant to be able to be kept overnight, even if I close it out that day. And we don't do an awful lot of trades. You're not going to have a lot of trades on at one time. You might have, you know, if it's really busy, you might have 4 trades on at a time, maybe 5 at the most, but typically you're only going to have 1 or 2 on. And you know, there's not very many day trades that are done per day. We're looking for very high probability trade setups here. So we're not taking 15 or 20 trades. The SPY super system trades that I do in the room, that I mentioned, I can't call them out or post them. There can be a lot of those. There can be, I took 2 yesterday, and I probably took 4 or 5 earlier in the week. So I might do 6, 7, 8, 10 of those. But other people trade a lot more than I do using that SPY super system methodology. Okay, so just to cover where we are right now, this is June and July. This is the last June and July of this month to date so far, just to kind of bring you up to date. And you can see what I mean. We don't have a lot of trades here. In June, we had 9 trades, 9 wins, 1 loss, 9 out of 10. We had this Sarepta loss right here. This was our only short, by the way, and Sarepta bounced up. It's still a short, but we ran out of time on it. So we lost that. But these are the other trades we took in June. So you can see we had 9 wins, and we've got 7 wins so far. I missed one here. 7 wins so far in July. So we got 16 and 1 in the last 17 trades. That's a pretty good record. And again, you can see we're very selective here. We don't have a lot of trades on. We didn't have a lot of trades on in June. I don't have a lot of trades on July. The number of trades that we take is directly related to what the market is doing. If you're in a news-driven, choppy market like we are right now, with tariffs on, tariffs off, wars on, wars off, all kinds of posts coming out on social media and Twitter from the administration, that kind of stuff drives the market back and forth, back and forth. So news-driven markets are very tough to trade because they're not really technical. So I cut back on the number of trades. I just look for the very best ones. Right, so there's our June and July trades so far. We're up 2,860 this month in 4 trading days. We did 3,790 last month. Not too bad in 10 trades. All right, now this is going back to January 2024. And what I want you to see here, if we go back in here, look here, you see the percentage gains, mostly 20, 25, 23, 42. They fall within a fairly tight range here. And then most of the time you're going to fall within these ranges. 20 to 25, 30, 35%. We did have a 96% in Boeing. You get some of those. We do have losses, obviously. Mara was 65%, but generally speaking, you can expect somewhere between 25 and 40% profits on a trade. So in January of 2024, we had 20 wins and 2 losses. We had a 90% win rate. Each 2,000 invested produced 75.05. February, again, notice the percentages. I'm not going to harp on this stuff too much because you can see the percentages here, but they're going to stay around the same. We had this was a big month, and it's February 11,745. Notice how many more trades I was able to do than I can right now, because the market was allowing us to take more trades. Right, very, very important. Whether it's bullish or bearish, if it's trending, we can take more trades. We can stay in trades longer. Right, here's March. This was May. Again, we did a bunch of time spreads in May because that's when earnings come out. See the percentages, stay the same. 48, 32, 38, 38, 60, 28, 24. You see this month after month. 15 and 2, 88% win rate. In the trading room, we had 81% win rate. This was the alerted trades, $4,979, and options trades, 57.36 in the room. But again, you'll see the numbers stay fairly close. This is 86% in the room, 92% on the alerts. We had 14 and 1. See, fewer trades on alerted service than on the room, because I can't alert everything that I take in the room because they may be too quick or they may be too close to the close. That doesn't give the alerting folks time to operate on. All right, so there's your June trades right here. There's July. You can just look at these. When you get the recap, you can go back and look at the specific trades. But this is very consistent, very consistent. August, decent, 45.35 in the room, 24.62 on alerts. September, this is my losing month last year, and I wanted to show you this. Again, I try to be transparent. This is my one losing month in 2 years. But notice look at the win rate, 62%. It's horrible. 8 wins and 5 losses, just a horrible month for me for trading. But it's very rare, but it does happen. I just want you, but notice we only lost $1,786, and we only lost $295 in the room. All right, and look, we go to October, look at the difference. 74.48 in the room, up in 6,063 on the alert service. So one bad month, we just recovered immediately from, because I know that these strategies work. So something like this it may discourage you, but it's not going to discourage me because I know these strategies work. All right, there's October, there's November. You can see these all. Just this was January through April of this year, just to kind of cover them. 84% win rate, 89% win rate, 83% win rate, 85% win rate. You notice the number of trades we're taking is diminishing a little bit here in April, 11 and 2, because of the news. This is when the news started messing up the market. But we had nice wins here. 3,000, 4,000, 8,000, 5,000. Okay, just so you know, an alert, when you get an alert, if you're on the alert service, you're going to get on the date, you're going to get the date it was sent. It's going to tell you the stock symbol right here, Nike. Buy the April 11th 67 puts for 285. That's what the first alert's going to look like, just that line right there. All right. Then you're going to get another alert to tell you to put a sell order in. In this case, we put a sell order in for 9. Then when it's sold, you get an alert to tell you what we sold it for and when we sold it. And that's your total alert. First part of it, second part of it, trade closed out. Okay. So you're getting stock symbol, option strike price, option expiration date, and the price to pay for the option. Okay. And this we've pretty much covered this. How do we achieve such stunning results? Okay, we follow the process. We're able to identify when institutions are driving a trade and when the market internals are heavily in our favor. Right? So we only take trades when both of these are in our favor, allowing us to align our trades with institutions in the market. Now, I will take trades if the institutions are in the trade and the market internals are neutral, as long as they're not against me. Okay? And we do this by looking at triple screen assessment. We look at momentum, trend, and money flow. But the main one is momentum. And I've shown you this. This is the one we take a look at. And what we're doing is we're looking at this over multiple time frames. If you're looking at a 5-minute chart, you're looking at the 5, the 15, and the 45. If you're looking at a daily chart, you're looking at 1 day, 3 day, 9 day. And when you've got momentum that's moving up or moving down across multiple time frames like that, the only way that typically is going to happen is if institutions are driving the trade. Okay? And when momentum is, it's important to understand what momentum is and what it isn't. If you look at a chart and you see like 3 green candles in a row, you might think, well, this has got good momentum. That's not true. What the momentum indicator looks for is it looks for 5-minute candles, for example. It looks at the open of the candle, the high of the candle, and the close of the candle. And what you want is, as you go candle to candle, you want that close of the candle to be moving closer and closer to the high of the candle. That tells you that you've got institutions driving the trade, not just that it's green. All right, so here's one we looked at. I won't go over this one again, but here is the SPY super system. Here is your indicators that we talked about, right? This is a new template you can get. If you buy the SPY super system, you get this template, which has all these indicators. You'll also get this template. This just has the current time for momentum. This is for traders who only want to trade SPY super system type trades, 5-minute candlesticks, just trading intraday trades. And you can do that on stocks too if you want, but this is all you need for that. You don't need all those other indicators. So you have this template as well, right? This is the current time frame momentum one that comes with the system. And so this is now we'll look at a few SPY super system trades here. These are Fibonacci candles. This is the SPY, all right, 5-minute chart. See the indicator right here? We're only interested in current time frame momentum. See, it went green, buying, yellow, selling, breaking below the 15. This is where we take the trade. As long as it stays below the 15, we stay in the trade. Beautiful, beautiful, beautiful trade as the institutions continue to sell, 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 sell. All right, that was in February. Now the SPY super system, I just want to kind of run through these pretty quickly. This is for the SPY super system methodology when we're just trading 5-minute candlesticks that I showed you. Just trading the SPY, the Qs, the IWM, the futures. It's different from swing trades. But these are the ones, this is my results because I can't post these and I can't alert on these. But a lot of people in the room follow this methodology. This is the results I've had with that. And you can see how good they are, all right? And see how many trades I had in August, 56 wins, 6 losses, 2 scratches for $8,200 because there's a lot, it can be a lot of trades, but you've got to be following the strategy successfully. But these are my results. These are not necessarily your results. And with the SPY super system methodology, you're only going to have one trade on at a time, and they're going to be very short duration trades. 5 minutes, 10 minutes, 20 minutes. This was November, another good one. December, another good one. Right? So this was October through December of 2024. Here's October. Notice this was the SPY super system trades, $4,831. All right, 33 and 4. This was the room trades. These were my results. These are the results you would have had if you took the trades in the room, because these I post, and everybody would be basically in and out at the same price. And these two totals are completely exclusive from each other. The SPY super system is not included in here, and this is not included in this total. These are separate methodologies, separate systems. Important to understand that. Right? And here's the November, and here's December, and here's the 3 months for October through December, 4th quarter, just to show you what kind of results we get in the SPY super system. Look at the trades, 44 and 7 for an 86% win rate, 1,700, 156 and 24. It's a lot of trades. So this is only for people who want to do quick trades off the 5-minute chart and have a methodology that's going to allow them to be successful with it. All right. Another SPY trade here, just again so you can see these. This is before I had that other template. This is the current time frame momentum. This is where you took the trade right here as it went from bearish to bullish. Take it here, write it up. $220 profit per contract right there on that SPY trade. Here's the same trade, a different trade off the SPY system. This was a short. See, I get in here, it went red. I get out right here. I only stayed in for one candle. $90 profit per contract. Another SPY trade here. This is using the new template right here. So this is where you get in. As it broke down below the 15, it went yellow. Stayed in here. As soon as it pops back up again, I'm out of the trade. Again, this is using the new template. You can see how easy it is to use here. If you were trading this, you notice it's coming up above the 15, but notice this yellow. I take it right here as it goes green. Write this up. And just so you can see these, I kind of want you to be able to see what that looks like. And these are some older trades I had before I had the actual indicator down here. This was a confirmation fine. I didn't use it, so I got rid of it, and I put in this, the actual momentum indicator itself. Right, SPY super system trade here, $130 profit. Notice green. You buy it here as it comes sideways and pops. Just so you can actually see the setups here. Okay, there's IWM. Again, above the VWAP, it goes blue. You buy it there. And another nice SPY super system trade here as it comes down below the VWAP. Everything's red. You know that institutions are selling it. You stay in it. The 15 becomes your stop. You ride it down. As soon as it bounces back up above the 15, you're out. And notice it went from selling to buying. Institutions just came back in here briefly. Right. So I won't go through every single one of these. You can see here I didn't post where I get in. If you looked at this trade, see the current time frame momentum went from red to blue, and it popped up. But would you take it? No, you wouldn't. It's below the VWAP. VWAP's right there. Next candle on the VWAP. This is where you take the trade. As it's blue and it breaks above the VWAP, this is where you take the entry. Right there. Just a small trade, 5 or 6 candles, 25 minutes or so. And this is when I actually took both ways. I took it short on the SPY. Notice it's red. Current time frame momentum red. I took it as it breaks below the VWAP. I write it down. I get out right here as it switches back to green. Then it goes to blue. Now it goes from selling to buying as it breaks above the VWAP. So as it breaks above the VWAP, as it goes blue, I take the trade right here and I write it back up. Gets to the pivot point, I get out. So I took it short, took it long. The institutions were telling me what they were doing. Okay, so I'm not going to go through every one of these just so you can identify them, but here's what you're looking for right here. Selling right here, you want to be short. Buying right here if you wanted to be long. You could take it long here, but I didn't take it long here. But this was a bounce up. But it didn't do much. You would have made a little bit of money on it. And some of these are not going to work. Some of them are going to reverse on you. But as long as you get in very close to the support level, you'll be okay. Now these are some trades that we took. These are swing type trades that we took. These aren't the SPY Super System methodology trades. These are SPY Super System software that we take in day trades and swing trades. These would be alerted to. It would be called out in the room. This was SMR. We looked at this one earlier. Here it is here. Went green on the current time frame momentum. Multi-time frame momentum was green. Perfect entry right there. That was a beauty. This was Nike. This was the one we shorted on the 28th right here. We took it short right here. Notice everything it's getting sold. It was getting sold all the way along. We took it here. Some folks actually took profits right here. We stayed in it. And by the way, this VWAP is not effective on the daily. I don't use it at all. It's moving sideways, but this is the gap down that we got. This is where we made 216% on that trade. We get out and notice it bounced right back up again. Sarepta, this was another one we had short that we came in on the 28th right here. We rode this one down, made a nice profit on this. Notice the selling. It's not hard to see that the institutions are selling this stuff. Anybody who's a trader should be able to see that. This was an HMS long trade that I took back in February. I took it right here. I probably should have got it back in here, but I took it here. Everything's green. You can see they're all buying it. This is where I spotted it. I got 25% profit in it. I left the runner on, and I didn't post this in the room. I didn't post this as any part of my results, but I left the runner on. This big spike up here, that runner went to 269% profit. But I posted it as a 25% win because that's only fair. Palantir, nice one right here. Again, buying, see the selling, back to buying again, see the pop, coming out of compression, take it right there. Palantir, we've traded this a lot, a 31% profit in 2 days. Lulu, a nice short. This came down on earnings. Notice it's red here, but notice it's blue, and then it went to yellow right here. See, it went buying to selling, institution selling. We take it here. We ride this thing down overnight, 56%, in for 192, out for 300. Okay. Another one right here, Amazon. This is a 5-minute chart. This was an intraday trade. Notice that we're getting yellow, green, selling, buying, goes back to buying, pops out of the box. There's the breakout of compression. Take it right there, 32% in 45 minutes. Another one, nice EMPH here, 20% an hour. You can see the compression. You can see the pop out of the box. You see the selling, right? Verizon, another 50% in an hour on this one. See they're selling the heck out of it. It breaks below the VWAP with a pop out of the box symbol. And this was a Tesla we had overnight. We took it short on an overnight trade. It went from 120 to 112. Beautiful profits in Tesla. Okay, so those are the charts. That's how we use the SPY Super System methodology. That's how we use the SPY Super System software. The software is what drives these results. I think you'll agree that the results are pretty good. Here's the strategies we use. I went over these already. Straight calls and puts mostly. We're in a couple of trades, actually we're in 4 trades right now. We're in Microsoft long, we're in URGN long, we're in CNC short, and we're in Snow short. We have 4 trades on right now. Right, but here's the straight calls and puts, straddles and strangles, debit spreads using weekly options expiration. I went over all of these. I have videos on all of these. And again, the SPY Super System is what we do in the room. I have a lot of traders that trade this. They bought the software. They don't even have to be in the room to trade it. They know what to look for. I've got a fairly long, about 50 minutes video on how to trade SPY Super System trades off of the 5-minute chart for the institutions, for the SPY, the Qs, and the IWM. All right, let me just get a drink of water and I'll tell you what offers we have here. If you want to take advantage of the SPY Super System and this methodology that we use, and also the education that I try to give a lot of education every day. Okay, this is the trading room and the alert service, right? They come together, the trading room and the alert service. You can get a 2-week trial, and then you would go to a 3-month subscription after that for about $396. Obviously, you can cancel anytime before the trial is up. You'll get the text alerts. You get the live trading room, my live trading room, which I'm in every day from market open to market close. You also get all the videos on a wise way to trade options. Masterclass is about 30 of them. You won't get in the Discord room until after you join. Discord room will come separately. If you want to get a better price, this is what you want to do. This is the annual access to the room and the text alert service. You get text alerts, obviously. You get access to the room. You get the private Discord chat. 2 other professional traders in there. You get all the videos. $11.96 a year. And you've seen what the results look like. You know, $11.96 could produce $50,000, $60,000. You never know what to, you know, there's no guarantee in any of these things, but $11.96, pretty good price for this. Much cheaper than the quarterly. And then if you want a one-time payment, which you get all of this forever, at $24.96. Pretty nice price. Now, if you're interested in the SPY Super System software and scanners, and this is the one we looked at, right? The SPY Super System video and scanners, here it is right here. Pop them over. You get this, you get all the scanners. I have about 6 different scanners. It's gonna look exactly like this when you get it. And what they're gonna do is you buy the software, they'll put it on your Thinkorswim platform. If you don't have Thinkorswim, you can just download it. It doesn't cost anything. And Rightline will take over your machine and they'll put the software on your Thinkorswim platform, and it's going to look exactly like me, and you'll have all the scans, right? This again, so this is the software. You can do the annual membership where you get the software for a year, $14.98 for that piece of software. To me, this is a steal. This thing is worth so much money because it's telling you about what institutions are doing with those indicators. It's a huge benefit. $14.98. If you want to get in forever, $19.98 for one-time payment. This gets you in and you keep the software forever. Don't have to resubscribe at all. You're going to get 1 month in the options live trading room if you buy the annual, and a month of in the text alert service. It'll be installed by the Rightline folks right onto your computer. It doesn't take long at all. If you do the one-time payment and buy it for forever, you'll get all of the trading access here. You get the software, the scanner, the videos. You'll get it installed, but you'll also get 3 months in the live trading room and 3 months in the option alert service. If you buy it for a year, you get a month in the options trading room to try it out, and a month in the alert service. Okay, so those are your choices here for joining the room in the alert service, right here, or buying the software, or both. A lot of people buy these both. They buy the software so that they can do SPY Super System trades and learn it, and then they also join the room and the alert service as well. So I look forward to seeing some folks in there. And see if we have any questions here. How does the free trial work? Can we use the coupon after the trial? Yep. If you have any questions on this, I think if you take this free trial, it's going to roll you over. If you don't cancel, it's going to roll you over to quarterly. I don't think you can switch over to yearly after the free trial. But you'd have to ask Rory about that. You can call and ask him about that. And by the way, in the chat box right now, you've got links to both of these deals right here, both of these offers, the trading room and the alert service and the software. Let's see. We use the coupon after the trial. Will there be a replay of the session? Yeah, you'll get a replay, Erwin. This whole thing that we're recording today. If you want to listen to me again, you'll get it tomorrow or Monday. It'll go over all that, and you can call Rory if you have questions here. 786-732-4656, and he'll answer those questions for you on this. But again, I feel like the office here are really, really good. Listen, I'm a professional trader. I'm not a professional presenter. I'm not a professional marketer. I don't show any Ferraris in my stuff. I don't make outlandish promises about 400, 500, 600% per trade. What I'm trying to do is show and share with everybody a methodology and a piece of software that tells you when institutions are in the trade and when they're not. And it makes a huge, huge difference. So again, I'm just a trader. I try not to come across as a salesperson because I'm not a salesperson. But I am showing the results, and those results should speak for themselves. All right. Did you tell us what you are making weekly or monthly? I showed the monthly results. Listen, those aren't necessarily my results. I trade probably a lot larger than most people here, but I use $2,000 per trade, and I showed you what those results look like, Aaron. If you missed the first part, I'll just flip back there real quickly so you can see what the results were like. But this we go back to. This is what we've done this July and August. Here we got 9 wins and 1 loss in July and June, 7-0 in July. We're up about 37, about $6,500 right here so far in those 2 months. And other months before, this was February of 2024, we did 11,000. So it typically runs, it depends on the market, but it's typically going to run in the room between about probably 3,500 to about 7,000 or 8,000 a month, based on 2,000 per trade. That's just a rough number, okay? All right, just gives you a rough idea, but these are the percentages. So that's what we've got. All right, I appreciate it. Appreciate the questions. I do appreciate that. And again, if you have any more specific questions, you can talk to Rory about the alert service in the room and the SPY super system and scanners. This thing is to me, this is a gold mine, this thing. You're going to have something that very few traders have. It's going to help a lot. All right, so I hope if everybody get their questions answered. I appreciate everybody coming in today. There'll be a replay of the session. I look forward to seeing some of you folks here back with me on Monday or Tuesday. I'm in there again. I'm in there every day, Monday to Friday, open to close. I answer questions after question after question. Anybody who's got a stock they want me to look at, we'll bring it up. We'll look at it on Thinkorswim. We'll look to see what the indicators look like. I'll look at it on TC2000 to see where the support resistance levels are. We'll critique the trade. And a lot of my trades we take, I actually get from members of the room. We have got some excellent professional traders in the room now. I've got people with me that started in January of 2022, still in the room, and the results they've produced are really amazing. I mean, really, really amazing. So we have a lot of folks in the room who are specifically know certain sectors, and they'll give us information on that. I have a news feed that goes all day long called the Trade Exchange. So I get all kinds of information on deals that are going on with companies, unusual option activity, anything to do with stocks and options. McBroker only allow T1 option trades. Wanda, well, that would be straight calls and straight puts. If you want to do spreads, you would probably have to get approved, but you can get approved for being able to do strangles and straddles and also spreads very easily. They'll just have you fill out a different form. That's all. You should, if you've been trading at all, you should be able to get that. But T1 option trades, I believe, depending on who your broker is, that's going to allow you to buy straight puts, straight calls. It's not going to allow you to sell any naked puts, naked calls. You have highlighted momentum, but for the institutions, no volume details. Further, we would not know if they were planning to dump in short time frame like day swing. Can you elaborate? Well, I mean, the thing is, if you're looking across multiple time frames, more you're looking, if you're looking across like if you're looking at a 1, a 5, and a 5, a 15, and a 45 on the 5-minute chart, the indications of whether they're gonna be taking it quickly or getting out quickly is going to be reflected in the 5-minute. But as long as the multi-time frame stays still bullish, it's probably just a temporary thing. And what I'm using is the market internals. Market internals is looking at all of the volume when stocks going up minus all of the volume when stocks going down every 5 minutes, right? So you can get a very good idea of what's happening volume-wise as stocks moving up and stocks moving down off the 5-minute basis. And if it goes from a bullish market internals to a bearish market internals, then I immediately have to be suspicious that there is some selling coming on, and it's typically going to be reflected in the indicators pretty quickly. But if you're trading on a swing type basis, all right, you don't really care about what's going on the 5-minute basis. You only care about what's going on the daily chart. And the daily chart is going to be much more indicative of what you're going to do for a swing trade. You're not going to be impacted by the comings and goings of institutions on a 5-minute basis. You're much more interested in what they're doing on a daily basis. So that's how I determine that. But I'm looking at the market internals. Market internals will tell you a lot. And I can see if I'm in a trade and the 5-minute goes from green to red, then I know that I'm getting some selling from the institutions on the 5-minute. If I'm in a swing trade and I get that on the daily, then I'm going to be very suspicious. I'm going to try to probably consider about getting out of the trade if the whole daily chart is starting to switch to selling. But on an intraday trade, you obviously get a lot of ups and downs during the day. That's why when you're trading off a 5-minute chart, you've got to be watching your price action. You've got to ride that price action, because the institutions on a 5-minute basis, they can be buying and then they can be selling later. They could still be buying on a 15-minute or a 45-minute. But if you're trading off the 5-minute chart, you've got to watch that. But when those indicators turn green or turn blue, coming from yellow, you got institutions getting in. You're jumping in when the institutions are entering the trade. Then you've got to manage the trade at that point. Okay. I hope that helps a little bit answering your question. Volume, the volume is coming off the market internals. And volume does matter. But it's not just volume that matters; it's relative volume that matters. The relative volume of what that particular stock or index usually trades. Okay, did that help a little bit? All right. Some clarity. Okay, I mean, listen, there is no 100% perfect thing to know what institutions do, but the thing is, institutions are not a monolith here. You've got just because JP Morgan's buying, that doesn't mean that Goldman Sachs can be buying. What you're doing is you're trying to find a consensus of what's going on generally with most of the institutions. That's and what those indicators that we see, that's what's telling us what's overall happening. All right. And if it's not telling us that, you could have institutions, some buying, some selling. That's just going to be a neutral situation. And that's a lot of it. That's going to be reflected in the multi-time frame momentum, and it's also going to be reflected in the market internals as far as cumulative volume is concerned. Right, and I'm working on something right now to bring that market internals in volume, which market internals is volume, bring the market internals and volume into the picture to produce something on the SPY super system that will identify that somehow, one way or another. So we'll have a higher conviction on any of the trades that we take relative to what's going on with the market internals. Okay. All right, everybody. Well, again, we took a little bit longer than I had hoped, but I had a lot of questions, and I do try to be fairly thorough on here. So look forward to seeing some folks here first of the week. Have a great weekend. Thanks for spending Saturday here with me. Thanks very much. Doug, good to see you. Thank you. You're welcome. Welcome. Thanks, Moore. Appreciate it. All right, everybody. Have a great Saturday. Enjoy your Saturday weekend, and I'll hope to see some of you folks back here. I'll be back up and running on Monday morning, about 9:15. We'll have the SPY super system. That SPY super system, by the way, if you're in the room, this is what you'll see. You'll see the SPY super system. You'll see the indicators. This is what we talk about all day long in the room. We can change these to whatever we want, but most of the time I'm going to have the SPY up there on a 5-minute basis, watching to see what the SPYs do. All right. right, have a great weekend, everybody. See you all on Monday.